Hi CA students, let's revise CA Final AFM Chapter 8 Mutual Funds Practical Question 15. On 1/4/2012, ABC Mutual Fund issued 20 lakhs units at 10 per unit. Relevant initial expenses involved were 12 lakhs. It invested the funds so raised in capital market instruments to build a portfolio of 185 lakhs. During the month of April 2012, it disposed of some of the instruments costing 60 lakhs for 63 lakhs and used the proceed in purchasing securities for 56 lakhs. Fund management expenses for the month of April 2012 was 8 lakhs, out of which 10% was in arrears. In April 2012, the fund earned dividends amounting to 2 lakhs and it distributed 80% of its realized earnings. On 30/4/2012, the market value of the portfolio was 198 lakhs. So this is NAV as on 30th April 2012. 198 lakhs. Mr. Akash, an investor, subscribed to 100 units on 1/4/2012 and disposed of the same at closing NAV on 30/4/2012. What was his annual rate of earnings? Okay. Now, before going to this, we need to know the performance of the mutual fund. From the starting till the end, we have to see what is the opening NAV, what is the closing NAV. Then only we can find out the annual rate of earnings for the investor. Okay, now as we can clearly see, the closing NAV is directly 188 lakhs. Other than this, there is some cash balance also. So we need to find out the closing cash balance. That also will be a part of the portfolio. Why? Because the initial when the ABC mutual fund issued 20 lakhs at 10, then 20 into 10, 200 lakhs was brought in, but there were some expenses involved, and then 185 lakhs worth of portfolio was built up. So 200 minus 12 minus 185, 3 lakhs balance was still left. So that will be the opening balance. Then there were some sale, then there were some purchase, and then some dividend received. All those things were there. So we need to prepare like a cash flow statement, opening balance till closing balance. Then we have to arrive at the closing net assets. Then only we can find the closing NAV. Now going to the solution. Opening balance, as we have calculated, the initial issued was 20 lakhs into 10 per unit. So 200 lakhs was received. Out of that, expense involved was 12 lakhs. And then it invested the funds or rate in capital to build a portfolio of 185 lakhs. So 200 minus 12 minus 185 will give us the opening balance that is left over is 3 lakhs. Then so till here now we have solved. Then the next portion is during the month of April 2012, it disposed of some of the instruments costing 60 lakhs for 63 lakhs. So out of that 185 lakhs investment, something the mutual fund company has disposed of. So it is sold for 63, but the cost was around 60 lakhs. So 63 minus 60 will be 3 lakhs, which will be the proceeds. But anyway, since we sold 63 lakhs, so that much receipt will come into bank account, right? So 63 will be the addition to the balance of bank. So 3 plus 63. Okay. Then and used the proceeds in purchasing securities of 56 lakhs. So out of the balance, then 56 lakhs will get reduced because we purchased some funds, securities. Fund management expenses for the month of 2012 was 8 lakhs, out of which 10% was in arrear. So fund management expenses was 90% of 8. Why? Because 10% was still in arrear only. So only 90% of 8 will be considered for the closing balance. Then The fund manager. Okay, in April 2012, the fund earned dividends amounting to 2 lakhs. So the fund earned a dividend amounting to 2 lakh means we'll be receiving that much also, right? So dividends will get added, and it distributed 80 percentage of its realized earnings. So out of the realized earnings, out of this 2 lakhs, 80 percentage was distributed. So out of the 2 which we received, 80 percentage will get distributed. So 1.6 will get distributed. So now apart from this, they have given the closing balance. So based on this, if we plot here, this is the cash flow from opening balance to closing balance. We know what has happened. The closing balance is 0.8 and the closing market value of portfolio is 198. So the total value of portfolio is 198.8. Now as we know, for the calculation of NAV, we have to remove the arrears, then outstanding expenses, all those things from the assets to arrive at the net assets. So we know that the arrears of expenses, some 10% is there out of 8 lakhs. So that 80,000 if we reduce from this 198.8, then the closing net asset value will be 198. Okay, now number of units is 20 lakh units. So 198 lakhs divided by 20 lakhs will give us this closing NAV per unit, which is nothing but 9.9 per unit. Okay, 9.9 lakhs per unit. Okay, now we got to know the NAV. Now Mr. Akash, an investor, subscribed to 100 units on 1/4/2012 and disposed of the same. Okay, now his earnings will be calculating. As we can see from the cash flow also, or even from the question directly, this mutual fund has given what to the investor. The above portion, the whole para which we read, is relating to the management of the mutual fund. How much money the mutual fund company, the asset management company, received, how much it distributed to the investors, all those things. The second part, Mr. Akash, this part says, as an investor, how much we earned from ABC mutual fund. That's what is asked. So if you see in the above question, we can see the dividend was distributed. The dividend was distributed amounting to 80%. So 2.4 is what it is distributed to the investors. Who? Investor Mr. Akash. So Mr. Akash, for 100 units he received 2.4 as seen here. The capital gain distributed 2.4 will be 1 written. Then what else? Dividend also he might have received, right? So dividend also distributed 80%. Dividend distributed 80%. So 2 lakhs multiplied by the 80% is 1.6. And then there will be another thing which is nothing but the capital gain distribution. So as we can see, the company, the ABC mutual fund, has sold some mutual funds costing 60 lakhs. Some mutual funds costing 60 lakhs for 63 lakhs. So there is a gain of 3 lakhs. So but as we can see, out of that 3 lakh, only 80% has been distributed, right? So that portion only we have to take 2.4. So 2.4 distributed in the sense to whom? To the investors. So as an investor, I received only 80% of the realized earnings. So that much only I also should consider as income for me. So 2.4 plus 1.6 divided by 20 will give us the what per unit income received. Correct. Per unit risk it's nothing but 0.2. Now there is some other portion which is the capital appreciation. For the investment company, it will be capital appreciation which is unrealized gain only. But in case of Akash, if you see, he has subscribed to that 100 units on 1/4/2012 and disposed of the same on 30/4/2012. So he also has realized the capital appreciation. That also will be included. Even if he has not dispose this off, even though we'll be considering for the revenue return purpose, still will be for this earning we are calculating. So the loss on disposal will be he has purchased on 1/4/2012. That time the mutual fund issued was 20 lakhs multiplied by 10. So if he would have bought that, then it will be around that same price, right? So to that 200 lakhs minus 188 was the current value, divided by 20 will give us the loss, because as of now only 198 is the value. In the initial issued price is 200. So 200 lakhs minus 188 lakhs divided by the 20 lakh units will give us the loss on disposal. This will be loss on the capital appreciation, sorry, loss on capital loss, which is unrealized for the mutual fund company, but as an investor he has disposed this off. So it is a loss on disposal for him, which is 0.1. Net earnings will be so this will be reduced from 0.2, so net earnings is 0.10. Initial investment is 10 rupees, because he has invested only 10 rupees per unit. So 0.1 divided by 10 into 100 will give us the monthly return, which is 1%, and for yearly it is 12%. Thank you.